Good morning, everybody. I just need a minute and then we can get started and look for trades and everything. Link the stream, 1 second. All right, so today we're looking for something very specific. Just give me 1 second. Good morning, good morning. All right, we're looking for a couple specific things today. And before we fully get started, I need like a minute and a half, because I just need to finish mixing my coffee really quick. But other than that, I will be right back, everybody. Um, but one thing we're looking for today, so that I can identify this prior, is that on the daily time frame, see if QQQ is going to aim for the upper Bollinger today. Now, it really doesn't look like it, as the upper Bollinger on QQQ is all the way up at 616. Now, we know that yesterday on SPY, we were roughly 5 cents off of the upper Bollinger on close, but that still, for me, is considered an upper Bollinger close. So we should be anticipating roughly a higher high today, which, as you can see out of SPY, we're already starting to see that. So what the goal of the day really is out of SPY is to find bearish structure and to find some long-term shorts into that. Now, I will be sharing a watch list of some longer dated puts. Um, I might have to edit it a little bit. I haven't looked at it in a few days, but that's the watch list I'm going to be largely trying to buy some of these puts off of. And these puts are going to be extremely dated, so just a reminder on that. A lot of these puts will be out until hold on, let me get the roughly August, November, December, things like that. So give me 1 minute and I will get that shared. Now, for the SPY and everything today, we did have the CPI come out. It came out slightly cooler than expected, which is actually very surprising seeing how there was all of the oil volatility last month. We definitely should have seen the CPI likely come in higher. So it is very surprising to see that. Now, with check the VVIX. VVIX was at 104.71 today. Pulled up very slightly. Not anything super concerning, but again, as long as it's above 98, it is still a selling signal. Just want to check the 1 minute time frame. Now on the 1 minute time frame, we are going to just watch to see if head and shoulders forms here. And it's still hurting. I apologize. So will be wonky for me to draw still for the next few days. Now I am looking ideally for this cup to form, which means that we should not pull below the 680.78. That's on the 1 minute time frame. If that's going to complete, then we will be seeing the 682.44, but it looks like it might invalidate right now. Okay, with that invalidation, we can go ahead and close out that cup because that is no longer valid. And now we are very likely looking for 680.10. From that 680.10, very likely to form bullish structure and to start building the inverse cup to the downside. So we will be looking for that structure, and that also builds somewhat of a double top here, which I will mark in blue. So the whole goal of the day is to basically identify the bear structure at the top of, wherever the top's going to be. And reason why we're doing that is because today was the upper Bollinger Day 2 on the SPY, which heavily implies that we will be seeing a higher high into downward consolidation. Downward consolidation generally means towards the 5 mile. Now, downward consolidation generally takes about 2 to 3 sessions. 5 mile is currently at the 670.96. So, unless we're going to be pushing down a whole $10 today, it's very likely we're not going to be seeing the 5 mile today. Good morning, everybody. All right, I am gonna mix my, or gonna turn my microphone off for a second so I can mix my coffee, just so I don't, you know, have it going in your guys' ears. Anyway, I'll be right back. I'll answer that in 1 second, Hunter. All right, I am back. Okay, so for the upper Bollinger mechanics, and again, this was something that I created, so it wasn't something that I found anywhere else. Um, for my upper Bollinger mechanics, I generally want to see the upper Bollinger closed upon. So if that means the upper Bollinger is, let's say at let's just say 600, right? And the price closes at 599.80, then I usually wouldn't consider that an upper Bollinger close. Now, with how the market closed yesterday, it closed only 5 cents under the level. Now, it's still kind of iffy to call that an upper Bollinger move. Um, but I think with the 5 cents and seeing how it was very close to the end of the session that we just started to barely pull down to pull below that level. Um, for me and some of the others in the Discord chat, we do consider it an upper Bollinger Day 1 move. Um, even though by the full technical standards, it was still 5 cents off. So currently we are looking for, it's a little bit further bearish structure there too. Interesting. So we could be seeing 1 minute time frame, which does not hold a lot of weight, but we can be seeing this smaller inverse cup closing to the downside, which means we would expect a very small handle to the upside prior to pushing down further. But we will see if that gets invalidated. Now, I do want to look at semiconductors. Let's just see what's going on here. Now, for semiconductors, this is technically day 3 of the upper Bollinger, so this is an extended upper Bollinger push. So for semiconductors, this is already telling us that we should be seeing, um, some of that reprieve with the consolidation towards the pullback. So that's already starting to kick in today. So we will be looking for, again, bearish structure on semiconductors, bearish structure on the SPY, and from there, taking some very dated puts. Now, I have not shared the watch list yet. I'm going to in just 1 second, trying to maneuver everything with just one arm here. VVIX did pull up to the 106.14, back down very slightly, but we keep our eyes on that. The yields surprisingly are up slightly today, even with a cooler CPI. Very likely just due to overall oil volatility, even though oil has been pulling downward. I've been very vocal about the positions in DRIP, which again, DRIP's a bear ETF for oil. So if you're wanting a long-term short on oil, taking DRIP shares and everything is really, really good. QQQ, potential double top here. And I want to look at the 1 minute time frame just for a moment. Potentially a head and shoulders forming here as well. Doesn't look the best, but this is liquidity for a head and shoulders. So multiple signals or multiple symbols are telling us already that we should be expecting some bearishness. Now with UVIX, let's see if we're seeing this pull up yet. So it did pull up or pull down towards that 105.80 something. It's back up towards the 105.92. So every penny this goes up, remember that's really key. So we'll be watching that extremely. So I decide to have my throat cut out while I'm talking, but we'll be watching this very, very closely today. Generally, I expect the higher high to come in the actual intraday. So while we did see this 682.44 hit in the pre-market, I am actually expecting it to hit during the trading session as well. Um, so we do have to be careful that this early bear structure may not be as bearish as it looks, especially when we're seeing semiconductors here starting to form potentially a small cup to the upside. So we would just have to complete this cup, hit this 680, 663 range. From there, pull down slightly, form a small handle to the upside. So we will be watching that as well. Being very likely to finish out this head and shoulders. Now, liquid and HIG, I want to look at these today. A little bit of selling out of liquid, so that can be indicative of selling on the day. See a little bit of selling out of HIG, and with the HIG as well, we have been seeing a little bit of selling over the last couple sessions. Again, the HIG pulled all the way up towards the 80.52 a few sessions ago, so technically we have been somewhat consolidating within then corporate credit. Now, I do want to watch semiconductors here because I do think that this is going to be really the big signal for the day. So there's that cup closing. So we should be anticipating, sorry, it's very hard for me to draw right now. We should be anticipating a slight pull down from here, build the handle, and then continue the cup upward. Now on SPY, I want to see if this invalidated some of this bearish structure yet. Not really. Technically that could still be that right shoulder. So we will be looking for that. I do want to see if this is going to claim support of the 20 mile or a higher high here, or if it's going to try to aim for this 680-10 range first. If it aims for the 680-10 range, then that's telling us that's a large inverse cup slash head and shoulders, and that, very likely we would be seeing downside. But if we claim support in this range, then that cup towards that 682.44 is still very valid. So give me just 1 second because I do want to share that watch list. Hold on. Add a few options to this for December. Now again, today's the day that we are taking profit on our 46 TQQ calls. So just be aware of that. If you still have that, we can go ahead and take profit on that pretty much any time today. Let's see, September. So I think I want to add a few of those to it as well. Okay, I'm gonna share this with everybody, so just 1 second while I get it sent to the Discord. And if anyone from the Discord could share that to the chat, that'd be very great. Okay, let's go ahead and see what's going on here. So, 5 minute time frame. This is the range for a call. This is telling us that we can have a call from this second market bottom range up to the 681 roughly. Now, that doesn't seem like a whole lot of range here, but that 681 bounce would basically take us all the way to the 682.44. So the call room I still like very much. Now, one thing that I would be a little cautious of before fully committing to the call is that, again, potentially we can be pushing down towards this 680, basically the 680.10 to close this inverse cup. If we do that, that's a very, very prime range to take that call because essentially that call would be forming this handle upward. very likely would be, you know, roughly that whole 680 to 681 upside. Um, but again, with how the day's shaping, I am expecting slightly higher upside, but we will see. Now, I want to look at the VVIX here. See, the VVIX is telling us that very likely we're going to see slight bounce to the upside, just because it has been tapering pretty hard this morning. It did pull up to the 106.14, at the 105.71 currently. So not entirely defeated, but it's still pulling down quite a bit for me. Let's see if we hit this level. So we went to the 680.18. Fortunately, did not complete that inverse cup as close as that level was. Um, on the 5-minute time frame or on the 1-minute time frame, you really want these structures to hit almost to the penny. So we will be sort of looking at this as a rejection of that inverse cup, but we do have to be careful just because the liquidity is still very close. Market, or if the dealers really want to aim for that, they absolutely can. Seeing semiconductors pushing up pretty aggressively here too compared to SPY and QQQ, so that might be giving this um exit within the semiconductors compared to tech and SPY and everything. But we'll be watching it. Let's see, X still holding this 105.60 through 70 range. Do you want to say a major leg upward or downward in that? 1-minute time frame on semiconductors. This is still telling us that we have room to push. It's forming the cup, candle, very likely forming a smaller breakout from that range. Good morning, everybody. Bullish or bearish on the numbers? Very likely bearish. Majority of the data that's going to be coming out for the next month or two should be, um, hotter data, which means that should be more so on the bearish side. Now, one thing that we do have to be aware of though is that even though this isn't going to really take effect yet, is that we do expect um, oil to cause deflation rather than inflation. So how oil sort of works is that it causes an immediate um, inflationary reaction, but that inflationary reaction generally doesn't last a very long time. Generally, that's very, very short term, and from that short term volatility, it generally creates a very large deflation to the downside. So while we will be seeing the data very likely coming in hot for the next, 1 to 2 months, um, overall, this should be creating the conditions for deflation to the downside. So while we should be expecting hotter data, we'll also be expecting that data to flip over to the cool side very quickly as well. So, that can be a little contradicting, but hold on. Okay, let me answer my phone really quick, everybody. I will be right back. Hey everybody, I actually need to restart the stream. So I'm going to be gone for maybe about 5 or 10 minutes. Um, because I just have to restart the Wi-Fi and everything. But after that, um, I'll be back. So stick around. The stream will be back momentarily. So I guess the stream never cut out. At least that's what's showing. Um, so I guess I'm back, everybody. Okay, so let's see what's going on. Okay, I want to look at the 1 minute time frame here. Okay, so 1 minute time frame, we did close this inverse cup. This one right there. So now we are expecting push upward to create the handle. So we will be watching for that. Very likely that would be towards the 20 mile there. So that's that range I was talking about with the calls. Calls from that 680, we said 680.10 up to the upper or up to the 20 mil could be a really great position. Now, unfortunately, I was downstairs starting my internet, so I did not get to take the call, but it was there. Now, on the VVIX, this is a super good signal, and which that's kind of wonky. Hold on. Hmm, interesting VVIX candle. But very likely this is telling us there's a lot of upside within the day. So I'm assuming the Michigan data just came out. Go ahead and that really quick. See, Michigan data. So the 1 year inflation expectation went up to 4.8%. The expectation was a 4.2%, and the last reading was at 3.8%, so that's very reasonable. We expected the short-term inflation expectation to move upward. Consumer expectation and consumer sentiment dropped massively. So the prior reading on the expectations was the 51.7. This time it's 46.1. The consumer sentiment was 53.3. This time it's 47.6. So very cool readings in terms of the consumer expectations and sentiment. The inflation pulling upward very drastically can create conditions where it's causing consumers to pull back, which would cause a cooling within the economy. So this data can be read as fairly bullish, even though, you know, rising inflation is never really bullish, right? EVIX still pulling down, so it's at the 104.80. So a lot of signals telling us that the upside today could be pretty large. Now I do want to look at the HIG liquid, because if we're seeing massive buying, a SPY we would see here, but we're not seeing it here. Um, since the data set came out, only seen the HIG move up 3 cents within liquid. Not really seen it move very much at all. So even though the VVIX is pulling down, some of our corporate credit is telling us that the upside might be tapering out slightly. Look at the VVIX here because it is acting a little wonky. That massive candle to the downside, pulled down towards this 104.80 range. Now it's back up at the 105.13. So volatility definitely not done on the day. Semiconductors starting to see bearish structure forming with this potential head and shoulders slash inverse cup and handle. So we will be watching for this on semiconductors, as I can't draw very well with my opposite hand. SPY here on the 1 minute time frame, we still see a breakdown within this smaller potential bullish structure. We have this inverse cup being created, and so far, if we continue pushing downward, this will be the handle for that inverse cup. Okay, now what I would be looking for if I was bullish is that I would want this to turn into a bullish cup, close some of the upside towards that 680-90 range to, signify that we are going to see a little bit of upside, potentially with this inverse head and shoulders right here. But again, the bear structure is very, very strong today, so we have to be very aware of it. To go back to the VVIX, so it pulled up towards the, I believe, 105.14. It's back at the 105.10, 105.12 now. Now, I'm really looking for a very large leg up or downward within the VVIX to tell us, if we're actually going to be seeing major buying or selling throughout the day. So far, it's just a lot of tapering. I wouldn't put a whole lot of weight into that candle to the downside. So if we don't see a bounce here, then that will be that smaller inverse cup and handle completing, which would be this larger cup and handle on the 5 minute time frame. Now again, I'm still fully expecting a bounce to this 680 and 90 range. Again, with the lower Bollinger being hit and the up being close to the downside, we do expect some bullish structure to form at the bottom here. And we do expect a handle form to the upside to give us liquidity further downward. However, um, talked about this right shoulder here, building on the SPY. There is plenty of liquidity here to have a head and shoulders. So if we do see volatility spike upward pretty drastically, then all the liquidity is necessary here for them to pull the market downward. The VVIX is pulling up towards the 105.30, so it is seeing that slight upside. I want to look at QQQ. Also want to look at Microsoft and Nvidia. QQQ telling us very much so that it wants to close this cup here. Very likely towards that 610.55 range. Now, Microsoft continuing to do the selling thing. And Nvidia. The daily time frame on Nvidia. have to adjust this channel slightly, but we are still within that selling channel. The daily time frame though, um, for NVIDIA, it doesn't look like we're going to see this upper Bollinger day one. If we do, for some reason, see NVIDIA push all the way up basically to the 689 range, um, that would tell us that NVIDIA wants to try to go for that higher high come Monday. But so far, not seeing that just yet. Let's look at SPY again. Okay, good. Starting to see some of that buying to the upside. And this actually invalidates some of this prior bear structure, which is very nice. It doesn't invalidate this inverse cups handle yet, um, but it does invalidate some of the 1 minute structure, which is nice. We didn't really label that structure though. Um, so with this is that lower Bollinger to the 20 mile. Now, potentially, this could be that right shoulder starting to form, so we have to be very, very, very cautious here. The VIX or VVIX still holding this 105.02 range, so still very cautious here. Semiconductors pulling downward as well, with the SPY pushing upward slightly, so we do have to be cautious of that. Now, what I'm looking for here essentially is that are we going to see this smaller head and shoulders take? Are we going to see this inverse handle reject us to the downside? Or are we going to see this cup up towards the 682.44 take? Um, which again, that would give us that higher high that we expect during the intraday. Now, technically, we do already have a higher high from yesterday's level, so all those conditions are set. So we'll be watching that very closely. Yeah, let's take a look at Apple. Apple here is actually seeing some really nice structure on the hourly. It looks a little messy, I do apologize. But there's this very large cup forming. It's forming at that very crucial liquidity range as well. Not only do we have a cup there, we have the liquidity for a very large head and shoulders, which should be giving us a breakout. Now, for the next level you're looking for this breakout, which I don't really expect it today. Well, maybe you'll get it today. It's a 6 or it's this 262 52 range. It says 48, but it's the 52. From that structure, you would be seeing very, very likely take this arrow right here, a handle back downward, Now this handle can go downward pretty deep here. Again, this cup is basically a $20 cup, so um, as long as the selling doesn't invalidate the bottom of this cup, then we could be seeing a handle pretty much all the way down to this 240 range. Not the 240, it's close to that upper 240, so like the 248, 250. Um, Not that I'm expecting some massive handle to the downside like that, but it can be a potential. So now I want to look at QQQ here. Now, 1 minute time frame, this can be very, very deceptive. I can find the rectangle. Is that because we have not fully finished this cup yet to the upside? Is that even though it looks like it's wanting to form a cup here, this can create a very large rejection to the downside, and then this would be head and shoulders type liquidity. I'm going to take these smaller shoulders to signify it, but essentially it would be something like this. And then pulling down from here would give us that right shoulder to the downside. So we're going to watch that very carefully. Semiconductors here as well. Essentially be building out that right shoulder on the 1 minute time frame with it going from the lower Bollinger to the 20 mile. That 20 mile again is basically a decision range, so a rejection downward from here on semiconductors on the 1 minute time frame would create that head and shoulders to the downside. Downside on the 5 minute time frame, very likely being around that 684.53. Again, we just have to be very, very, very cautious. Now, I want to look at the VVIX again. So again, I do want to see it have a very large leg upward or downward. I really don't like it just hugging this 105 range, because it doesn't really tell us a whole lot. Now, I am going to take a second just to relax my wrist, because again, I'm not used to using my left hand for my mouse very often, so just gonna watch this for a second, rechat. Yeah, I saw that flash in the VVIX. It's really wonky for some reason. I don't get it. Um, Obviously it had to have been a real candle. I don't think this was a bug or anything else. So this is telling us something. This might have been because of the um Michigan data that came out, with that very, very large uptick in inflation. Maybe they were just trying to clear positions very quickly, something like that. But when we see trades like this is usually structure that's done on the millisecond time frame. Um, Not something that us retail traders have to actively watch out for too much. But yeah, that was definitely some sort of big money trade. Because again, when you see a massive candle like that, that's usually an algorithm. Because the algorithms can trade within, the split second time frame. They don't have to worry about human delay or anything else like we do. Um, so when we see huge moves like that, usually it's something very algorithmic. Now, I would like to see this cup taken back up to the 181.93. That would show that we would be seeing some additional buying on the day, that we would be likely forming a handle. Sorry, I can't draw it. Um, a handle for that cup, and continuing to try to form this larger cup up to the 682.44. From that 682.44, we would then expect bearish structure at the top, very large handle to the downside, and potentially rejection from there. I haven't checked our drip shares today yet, but I probably should. Oh, they are doing good. Doing very nice today. So the cool thing with drip, again, this is shorting oil. Um, but we're really expecting basically this large pushback upward towards this anywhere from 7 to basically $11 range. Um, Very nice move to the upside. The $5 calls out for June right now are, last time I checked, like $50. Oh, a little more than that right now. They're 57. Okay. So $57, but I still expect these contracts to go close to anywhere from $400 to $600 a piece. Um, when the time actually comes. So I like the trade a lot. I'm definitely going to be adding into it quite a bit, over the next few weeks. Oh, I want to check SPY, and I want to check the VVIX again. Gonna hide some of the structure here for a moment, but let's look at the VIX. See, the thing with the VVIX here is that it's not really making any new levels today. It's just really hugging this 105 range, which doesn't really tell us a lot. It's not really telling us any major signal of buying or selling, because with the VIX being above 98, that means that there is some form of selling going on. Um, with it being at that 105, that means there is some form of selling going on with some tapering. Um, so it's a little bit of a mixed signal. Okay, so we're gonna watch this just for a second. I'm gonna rest my hand just for a minute, drink some coffee, and I will be back in like 1 or 2 minutes. Just a side note here while I'm sitting here thinking. I also think that after we kind of decipher what's going on with the day here, you know, if we're going to see some major rejection to the downside or if we're going to be actually seeing our buying, um, after we determine that, I'll go over sort of what I'm expecting out of the market over the next 3 to 4 months. Because I do think today is a very, very quality day to position, fairly far out. But yeah, I will go over that in a little bit. Um, I did just want to mention that though, just in case I forget, so someone can remind me. Anyway, I'll be right back in just like a minute. Yes, I have started entering the dated puts. So for the dated puts for oil, currently we're using drip, which very, very, very cheap position to take. Um, Currently we're taking the five calls for June 18th or June 20th, one of those dates. I think it's the 18th. Um, that's the ones I'm specifically taking anyway. I know some people are taking the six strike calls, which are cheaper. Completely fine. I will be looking at some of the, I think there's September and January. There's September options as well. So I will be looking to take some of the, um, September options very likely as well. Um, Again, just taking a call as close to the money as possible will be the best way to trade this. And trips and inverse ETF for oil. So the bullish fund for that is Gush, which, Gush ran from 21 all the way to 48 during the oil volatility. But the inverse fund of that is Drip. So Drip calls are the same as shorts or, puts within oil. Now I want to go back to the SPY. I want to look at 1 minute time frame here. 1 minute time frame here. We are slowly closing some of these smaller cups, seeing a lot of upward action in the ADL, which, um, for an indicator that's telling you essentially that money is flowing into this fund. So on the 5 minute time frame, the ADL is going very, very high, um, telling us that very, very likely we should see buying up to this 681.94. From that 681.94, start to form a handle. Sorry, I'm going to delete some of these. But from that 684, start to form some bearish structure at the top, form a handle to the downside, very likely around that 20 mile range. From that downside handle, very likely close the cup up towards that 682.44. So gives us range for, excuse me, for two more really quality options on the day, at least for the morning trade anyway, because this will give us the short within the handle. Very likely it's going to push up towards the 682 because again, with the cup closing, I expect it to push above it slightly because I expect bearish structure at the top. So that would cover that 682.20-ish range, give us the short position down to the 681. From that 681, if we see, the VVIX pulling downward greatly and everything else, if we see these signals telling us to take continued calls to the upside, then, we will run those calls from the 20 mile towards that 682.44. So that's the plan for today so far, everybody. And I do want to look at the VVIX really quick. This thing is doing nothing today. It's driving me crazy. And what I mean by it's doing nothing, um, if we're expecting any form of buying to the upside, even if it's just $1 worth of weight to the upside, I'm expecting the VVIX to pull downward. Um, it hasn't been doing that. It's just been really hovering around this 105, 10 range, give or take. So hasn't really been giving us signals that we're going to be seeing that major buying or seeing major selling just yet. Up has not fully closed, I don't think. Went up to the 181.94. So I mean, technically it closed. It just didn't create the bearish structure at the top that I was looking for just yet. But this cup did close almost to the penny. So we should be expecting a slight handle to the downside. From that handle to the downside, a push back upward to the upside. So very tight structure here within the day. They're not giving a whole lot of time on these entries. So no, they don't have much theta at all. And especially with the drip fund as well. There isn't a huge amount of decay to the actual fund. So originally what I was wanting to do, I was wanting to take SCO shares and calls, because this is also a bear ETF for oil, so this moves upward when oil drops. However, this has a larger decay to it, so our calls would be fighting that decay while fighting, the actual price action itself. Not something I really want. Um, with drip, it's far more leveraged and less decay, so we should be seeing, quite a bit more upside within the contracts and the share pricing and everything. Now you can go as far as to enter like puts on Gush, um, puts on Yuko, things like that, puts on USO. Just they will be far more expensive. With drip, we can pretty safely load these 5 call positions into, the next few months because the downside's really not going to be very large at all. Um, it's actually very likely that our calls run in the money. I'll be right back, just 1 minute, everybody. I'm gonna zoom into the 1 minute time frame here, or I go AFK for a minute, but I do want to get some more coffee. We are seeing this cup and handle forming though. This is bullish structure, so we should be fully expecting and anticipating bullish structure to the upside. Anyway, I'll be right back in 1 minute. Alright, I'm back. So we're having problems with our water heater, which is apparently a smart water heater. I don't know exactly what that means other than it has to connect to the Wi-Fi, but that will mean that um, during the day a few times I probably will have to restart the Wi-Fi a couple times, so I will let you all know, but just expect that. Now, 1 minute time frame here, we are seeing the anticipated bear structure at the top of this cup. Now, while I do usually expect it to be higher on the cup, it is still forming here. And with it still forming here, we should be expecting a 5 minute time frame to go to the 20 minute or go to the 20 mile. So this would be that put position from the upper Bollinger to the 20 mile. No, I did not take it. I was looking a lot closer to the 682 push within this range, just because I was expecting slightly higher structure above this cup. Unfortunately, that did not happen. So what I will be looking for primarily here today is this call to the upside. Now, we have to be very cautious because again, this isn't usually the range that I attempt to take calls on. However, with this being a cup and handle and with us seeing this 682.44, Um, we should be able to land a call from this 681, maybe even the 680-80 range, towards this 682.44 plus. So that should be a very nice contract into the, um, you know, middle of the morning. Seeing that within semiconductors as well. So this right shoulder actually hasn't validated. That's a good signal for semiconductors because that's telling us that very, very likely the bear structure that we were looking at wasn't really bear structure at all, and that it's gonna remake this cup. And that very likely it's going to be a cup. I apologize, I can't draw very well. You all know my hand's broken, but that's a cup. Um, so the upside today should be pretty large. We're seeing a lot of the same structure. Then a lot of our symbols here, kind of same thing we were seeing on the SPY, well, except QQQ did fully invalidate the bearish structure that was built here. So this tells us even more so that we should be expecting, um, a higher high on the day overall. So that looks very good. Looks very good overall. We can get our downside to create this handle. I will take calls at that 20 mile range today. Generally, I don't take calls at the 20 mile range, but this is kind of one of those exceptions. Now I want to look at the volatility. Hold up to the 105.68. So that is concerning. We just want to make sure we don't end up in some wonky bull trap today. Downside of here, again, fully expecting this handle to form. On the 1 minute time frame, we should push down into this lower Bollinger. On the 5 minute time frame, that would be below this uh, middle Bollinger. Sorry, I can't talk. So that's what we're looking for now. And again, from that, calls to the upside. So there's been multiple trades today. Just personally, I missed a few of them. Like this one when we pulled down the 680, I was restarting the internet. So missed that, but we did call that out. So I am gonna mark it. Would have been a very nice trade. With this push down here, this is exactly what I'm looking for calls. Um, so exactly what I'm looking for the call upside here. See the VVIX. So push up to the 106.13. So potentially we're starting to get some real volatility in here. Have to be very cautious, but this is exactly what we were looking for within that handle. Um, I currently have a 681 call going. Again, fully looking for the 682.44 before we exit. Even if we are seeing a little bit of heightened volatility here. Semiconductors, I'm expecting this cup to close to the upside. So we will be watching for that. QQQ, creating that cup and handle as well. Very likely that was that entry on the handle. As I said, today is a very, very tight day. They're not giving us very much time on these entries at all. So you have to be really, really, really on top of it. Now the VVIX did pull to the 106.36, is back down to the 105.90, well, back towards the 106.04. So a little bit of volatility. Again, we just have to be very cautious that we don't get bull trapped here, because potentially this can be a very brutal bull trap. This can turn into a double top, and it can take us down on the day quite a bit. So we do have to watch out for that very closely. We'll see if this inverse cup, the downside here, is going to close. If that does close, then that will be, alluding to further downside. But if we get a bounce from this range, then that will invalidate that inverse cup, and that will, start taking the cup and handle that we were looking at towards the upside. EVIX is at 106.15, so again, some volatility coming in here. Now for these calls, and my entry was at that 680-70 range. For these calls, usually we would take these to the 20 mon, but again, with these positions, we are looking basically for the cup to close to the upside today. So that would take us all the way back up to the 682.44. So I am going to be holding the calls for that. Um, with the calls, I will be taking a few positions of the profit once we actually do hit the, slightly above that 20 mile range, just in case, just because today has had some pretty volatile candles. I'd hate for us to have the profit on the calls and for it to, get wasted. So Just had to be careful here because the VVIX is very elevated. Did pull downward towards the 104 range and is all the way back up towards the 106. So that does mean that some form of dealer is hedging positions, even though overall we are looking for the cup and handle breakout. For these, I'm taking just 0 DTEs. Um, Usually I'll take 1 DTs or something like that if I'm seeing the upside continuing. Um, but with today's expectations, I am sort of expecting us to create this bullish structure and then start forming bearish structure to the downside if we don't start forming bearish structure prior to that. Um, Again, today was SPY's uh, day two of the upper Bollinger. So with the upper Bollinger day two, that is the time that you short. Um, so ideally, we are trying to look into a short position for today, but we just want to get past some of this short-term bullish structure. Semiconductors here, very, very likely closing this micro cup here to the upside. From there, build a handle, continue the cup back up towards that 688, 66, essentially that 689 range. Now the VVIX has pulled up to the 106.64 or 46, excuse me. So that is starting to become very bearish. Again, every single penny the VVIX moves upward, that is telling us that dealers are having to hedge their positions. So even though we have been seeing some buying on the day, we do have to be extremely cautious when we are seeing the VVIX moving upward like that. The ADL here tapering a little bit too. You see how it was pulling up very greatly, seeing a little bit of that selling in there, but so far it's just holding that range. We're not really seeing major buying or selling yet. So it is something we will be looking for to the upside. Also, I will be right back in 1 minute. I do apologize. I do have to get up quite a bit this morning. Sorry about that, everybody. I'm back. Had some struggles opening my med containers and then had a lot of struggles getting my daughter into the car, so. Okay, let's see what's going on. All right, so it looks like our cup and handle is playing out very well. If you had puts up there, please make sure you've closed them already. So we are going to mark that as a trade, even though again, did not take that. And I am still currently in my calls, going to be holding those for the 682.44 today, as the cup is heading its way up there. We're sitting within the ADL as well. That, if you were able to draw on the actual ADL, it would be a cup and handle. So our upside is looking very nice, at least structurally from what I'm seeing within the SPY. Now, VVIX, let's see. This pulled to 106.55. Is coming back down to the 106.07. And let's go ahead and look at, hold on, I want to look at semiconductors. I want to look at, okay, so semis are forming that cup. Not fully filled yet, but it's, you know, literally going to hit any second now. Um, so that's good. That's something we were expecting. Now, from this cup hitting, again, we're expecting bearish structure at the top so that we form a handle. Sorry, it's very hard for me to draw. Form the handle upward. And I will explain straddles in a couple seconds here. I just want to finish looking at everything. So QQQ, finishing that cup that we've been talking about. Larger inverse head and shoulders as well. So we should be expecting a small pull down or a handle on this larger cup here. And from there, very, very likely seeing a higher high on the day. So SPY, we are looking for the 681.94 to hit. That will tell us that this micro cup is closing. Very, very likely going to be seeing it here. I'm just being, excuse me, keep losing my voice today. I'm just being very patient for this cup top to hit. From this cup top, and it does correlate within the 5-minute time frame, that this will give us a small put position, which personally I'm not going to take just because the room is not very large at all. Unless we push up, well into the 682 here. It's very hard for me to catch this arrow. Sorry. Using my non-dominant hand here. So with this push into the upper Bollinger, while not fully there yet, again, I am expecting this 681.94 to hit. From that range hitting, it will create the conditions for a small downside to the 20 month. So there is a possible short position within that. But again, that's not what I'm looking for. Um, from that, I would be looking for that larger breakout in the day. And very likely at that point, we would see the VVIX pulling downward and potentially some other signals. But VVIX currently still very high-end on the day. It's at 106.28, so still very elevated. Now I want to look at, hold on. Now, one thing about QQQ is that remember, I believe at the either 616 or 619 is the upper Bollinger on QQQ. So if the market really wants to push for some absurd, crazy bullish day, then QQQ can take that level. Um, I'm not expecting it. I think that'd be sort of absurd, but we have seen some very absurd, sessions out of the last few weeks. So, um, you know, just keep that in your head. Not that I expect it, but the potential is there. Now, within the HIG, we saw a little bit of selling today towards the 80.17, and while this may not seem like a lot of price action, this is, quite a lot of price action because usually only institutions are trading this stuff. So within the share sales, usually the blocks are very large. Um, excuse me, I'm losing my voice again. Usually the blocks are very large on the buying and selling. For example, within the time and sales, I'm seeing a 100,000 share buy, 2,000 share buy, 1,200 share sell, 1,600 share sell. A lot of very large blocks within the HIG that trades. Now, granted, I don't track any of the trades below 999 shares. That's just to really filter out a lot of the noise. But the HIG buying upwards slightly, even if just a few cents, that's still telling you that institutions aren't fully ready to commit to some absurd selling downside just yet. Potentially that's actually showing that there's, a little bit of buying on the day. Um, liquid here, massive candle downward kind of throws off our charts, but liquid, we're kind of seeing the same thing here. We had that pretty large pull downward, and I'm not accounting for that massive candle down to the 108 really, even though it was a very real candle. But we were closer to the 109, and now we're starting to head up towards that 109.50 range. So starting to see a little bit of buying within our higher tiers of, equity risk. So that's telling us that, potentially we could be seeing a very bullish day, even though we're already pushed up quite a bit today. So very much so looking for this 682.44 range to hit from that 682.44. And I'm just going to mark this area kind of as the short range on the day. Because from that range, that's going to be this larger cup, which I am going to delete some of this smaller structure here, just so that it isn't so annoying to look at. All right, so that should be the expectation. Now, when we get into this nice little purple box up here, which I'm fully expecting us to at this point, that should be pretty clear. But once we get into that range, that's when we take dated shorts. Now, again, the potential on the day is that we see some very, very, very large buying to the upside, and we see that QQQ tags its upper Bollinger. Now, I don't think that's going to be the case today because, again, the upper Bollinger is all the way at that 616.86. So we're actually just going to mark that. Okay, and we will mark this in white. Now, on the actual 5-minute time frame, that's well above us. However, that's not entirely out of range. Um, that's basically saying that QQQ would be up roughly what 1.2% on the day, which isn't unreasonable to have that type of price action. So if we're going to secure this upper Bollinger Range, really understand that the market's basically going to be closing at the 617 plus range. Okay. So that's kind of, the wild expectation for the day is if we see this massive cup and handle and SPY breakout, that we can be seeing, potentially this take us up on QQQ. If that takes us up on QQQ, then that means that, you know, next two sessions, today and Monday would very, very likely hold bullish. So you have to be very aware of that. Um, Small cup finally closed from the top of this cup closing. I apologize. I have to answer this call really quick, everybody. Apologize for that. I keep having to go AFK today. Okay, everybody. So today's playing out almost to a T of what we have been expecting. And I just want to label this because we really did nail today, and I think today's a good type of day to really label this type of stuff for future use. Now, today was a little more difficult in terms of the actual entries because, for those of you that were trading it during the time, um, our entries were very, very short. Okay. They only gave us literally a few seconds to enter the position um, before before they moved the price up. Then we're going to label the put entry. Now, again, I did not take these puts here just because I don't think there's a whole lot of room between the upside here and the bottom of this handle, but this still was an entry. Okay, and I do want to label that. Um, One thing that I think needs to be said because I was talking about it in chat yesterday is that when you're playing contracts, options or even futures, right? A lot of people and I'm saying people in general, just traders in general want to see massive room from their options. Well, unfortunately, that's not always how life works. Sometimes you're only going to have, say in this current moment, if you shorted the top right here, well, technically that's only telling you you have about 80 cents worth of room to take a position in. Can you profit from that? Absolutely. You can make massive money off of that. It's just going to be much different. You're going to have to exit much tighter. You're going to have to, usually in this type of position, this is the type of position where you take more contracts for lighter room, meaning you're holding those contracts for a lot less time and trying to get a lot less of a move out of them. But with the additional contracts, you're trying to basically beef up how much you gain during that movement. So that's a really good type of movement for that. Lots of contracts, not expecting some massive runway. Now, when we had our call entry down here, well, our expectation from these calls were all the way back up towards the 682.44. Well, shouldn't say were, still are. Okay. Um, and with all the structure and everything we're seeing, it's telling us very much so that being able to hold those calls for that upside is likely going to pay out. Okay. But don't be hesitant to take some of these shorter scalps either. There's definitely money to be made, even if you only see 50, 60 cents worth of movement on the SPY. That's still enough to take a contract, write it down, 50 cents, gain that profit, exit, and wait for the next position to open. So just something to think about. Even if the room doesn't look super large, there's still trades to be made. If you're going to be, obviously you have to be present, you have to be very much so on top of your game, you have to be watching what's going on, blah, blah, blah. Don't be afraid to take some of these smaller positions. I've actually had some of these positions where um it was some end of day, and I forgot the exact trade, but it was about 2 years ago on the SPY, and it was close to the end of the day. But the SPY only had about, I want to say 60 or 70 cents downward movement. But because of that movement, it allowed a ton of puts to be hit within the money. That would have been out of the money. And that ended up being like a huge, huge, huge trade for me when I entered it expecting it just to be some super tiny scalp. It ended up being like thousands and thousands and thousands of dollars worth of a trade over just like 40, 50, 60 cents worth of movement within the SPY. Um, Granted, that doesn't always happen, but you can have situations like that. Okay, I'm gonna go pour myself some more coffee really quick. I'll only be gone like 30 seconds, and then I'll be back and we're gonna cover a bunch of stuff. So, be right back. A few seconds, everybody. All right, everybody, I am back. Okay, so from what we're seeing here, and I just want to correlate this on the 1 minute time frame here, just to be entirely sure that we're good to go. Now, 1 minute time frame, we see the bottom Bollinger being pushed here. We see this much smaller, I'm still going to highlight it, inverse cup formed. I'm going to make it very skinny because I don't want it to be present at all. Make it a little like that. So we do have this tiny inverse cup here that we do have to potentially contend with. Um, you know, potentially if we continue down throughout the day, then this did create that condition that we talked about much earlier in the day where potentially this cup and handle could be creating some very, very complex bull trap, which would have been that double top. Um, I don't think that's the case with the 1 minute lower Bollinger being pushed here. That 40 something cents away is still quite a bit off. Um, so I am expecting this push to the upside, and this does correlate with our 5 minute time frame very well. My voice is cutting out again. Um, with the 5 minute time frame, it's showing that very, very likely we're going to try to reclaim support at this 20 mile level. Reclaiming support at this 20 mile level would then be a very massive signal to the upside saying that this cup and handle is going to fully break out and we should be more than good to go. Now I want to look at the VVIX. This is very, very kind of scary. Okay, this has been pulling up throughout the entirety of the day. Now, for bullish positions, we have been looking for this to pull downward. We have not been seeing that. So be very aware that even though I am seeing that cup and handle structure, um, our volatility is telling us that dealers are having to hedge for this downside. Okay. Semiconductors here on the 5 minute time frame showing us still this very bullish cup and handle, not invalidating any of the structure on the day so far, but we are expecting semiconductors to pull down slightly more towards that 386 or yeah, 387.66. So a little bit more downside anticipated within semiconductors. QQQ here, not seeing any invalidation of bullish structure just yet. We have kind of the same deal going on with QQQ and SPY, how there's this little bit of range where if the market really does aim to push down and claim it, then it can create that inverse cup um, to the downside. However, if we see a bounce like we're anticipating, then this will fully validate the, you know, cup and handle and the nested cup and handle on the day. I appreciate you all sitting around for the streams, even though I sound like a wreck half the time. Like over here, and my voice is cutting out and breaking my fingers and all sorts of crazy stuff. Now, I want to watch the VVIX here very, very, very closely. Because again, we've been looking for a very large, like upward or downward throughout the entirety of the day. Now, one could say that this has been a large leg upward. Um, However, I kind of disagree with that because it's been very choppy, and we've been seeing a lot of price action that has been kind of going counter to what we've been seeing out of the VVIX. So, um, potentially what's going on, and hold on, I need to drink some water really quick. Yeah, so a nested cup and handle, um, this is actually a super good example, even though I usually don't want to focus on structure within the volatility, but because the structure is actually present here, we're going to discuss it. So we have our cup here, and right here, we expect a handle. Okay, but within this handle, we see, and I'm going to delete this box for a moment. We also see that there's also this additional cup. So this would be that nested cup. And from that nested cup, you'd be expecting again a handle on that cup. So it's easier to say nested rather than saying, um, the cup's handle or however else we would describe that. So saying nested is just structure within structure. You could have nested structures within nested structures. So for example, if this was like the 5 minute time frame, if we went down to the 1 minute time frame and also saw a smaller cup building, then that would be a nested cup within this nested cup. Okay, so it's just a smaller structure within the larger overlying structure. Yeah, a lot of people don't know what the beige book was, and I didn't learn about it until probably I want to say 4 or 5 years ago. It was somewhere around that time. But hold on, I want to look at the 1 minute time frame here just to make sure we're not seeing some crazy breakdown, which yep, this is kind of what I was worried about. This is that double top that we were discussing, which is not good. Okay, that is not good for call positions. So with me not exiting this call here, I'm going to put this as red to show that I messed up. Okay, I messed up that call entry or the exit because I was expecting the cup and handle and the push upward towards the 682.44. Now, with that said, did we know that this was very likely going to occur? Yes, we did. In hindsight, without hindsight, the VVIX has been pushing up the entire day. Um, that is, again, one of the most bearish indicators you can see because that's big money telling you that, hey, we are hedging for the downside here. Every single penny that moves upward, they're all having to pay additional on their hedges. So that was a major signal that potentially this was going to be a bull trap. Okay. So that put entry, even though I missed it, it would have been super, super good. With that said, if you're still holding a call with me, because I'm still holding a call, this does not mean just exit yet. With this double top slash inverse cup being closed, and I know that looks ugly for a moment, but what we expect now is again, bullish structure at the bottom here and a push back upward. Okay, the push back upward again is to create the handle on this inverse cup, and it's to help build some more of this, potential head and shoulder liquidity that can be building on the day. So with my call, seeing how even though our bullish structure has been broken, um, when I do exit this call, it's very likely going to be red. However, the goal is that we're going to exit it on this upside push on creating this handle back downward. Okay. So we are looking to regain some of the premium back out of the call and potentially, if we see bullish structure take us up throughout the rest of the day, then that call would take us all the way back up towards that 682.44. However, with this double top really taking us out of that previous bullish structure, what we can now identify is that very likely this next 20 mile range we get to is going to be not only the call exit, but potentially a put entry. Now, I'm not going to be entering puts on this, um, other than the dated puts that we talked about throughout the earlier session. Again, those are posted in the alien chat or Dave's plays. If anyone was able to link it in the stream chat, that would be super awesome. I don't have the ability to do that right now. But when we get our upside here on this inverse cups handle right here towards this 20 mile range, which the 20 mile is at the 680.82, excuse me. So we're starting to head close. No, let me look at the 5 minute time frame. 5 minute time frame, the 20 mile is at the 681.20. That's far more what I was expecting. So around that 681.20 range, that's when I'll start entering some of those dated puts. And again, those dated puts are quite dated. Some of them are for September, November, August, all sorts of different durations. Um, Again, I don't think we're out of the bear market. I know we're having quite a bit of buying within the current market conditions. But again, we still have the Bank of Japan um, desperately needing to do an intervention on the yen. And that means that they're going to have to be selling treasuries, crypto, equities, all sorts of stuff in turn to get dollars back in their pocket. And they need those dollars in their pocket to be able to buy the yen. They have to buy the yen to be able to pull the price back up. And that's how they do their yen intervention. There's been two major yen interventions within the last few years, which was back in 2024 during late July, early August, and that lasted until I want to say almost the end of October. And then there was the second intervention, which was essentially since January 1st of 2025 all the way until April. So they can lead to quite large selling to the downside. And with, I just want to show the daily time frame really quick. But on the daily time frame, we see that the 5 mile is well pulled above the 200-day moving average. It's still below the 50-day moving average. And with today's upper Bollinger Day 2, we are expecting a push to the downside, okay, or at least consolidation back down to the 5 mile. 5 mile being basically at that 671. That means within 1 to 2 sessions should be around that 675, 676 range. From there, we can create either additional structure to the upside or continue the journey back down. Now, with that said, it's going to take the 10 mile and 20 mile quite a while still to pull above the 200-day moving average and the 50-day moving average. So we still have a lot of room before we're fully out of bear territory. We are seeing a little bit of this room pushed away, but we're still very deep in the woods here until we see all of our moving averages start really pushing above these ranges, then it's still telling us that there is very present selling, within the symbol. So now I do want to look at the VVIX and everything again, because even though today could be a very large bull trap, it could also be a very large bear trap. Now granted, we are seeing a lot of the structure we did originally want to see within the day, which was a bearish structure to show that we are going to start consolidating down to the 5 mile. So far we are seeing that. Now I want to look at a couple things here. So BVIX continuing to push upward. Um, Again, probably one of the most bearish signals you can have is when you're seeing dealers actively buying insurance against their equity positions. That's telling us plain as day that there's an expectation to the downside here. With SPY, with us starting to see some of this bearish structure building on the 5-minute time or on the 30-minute time frame, you can see this head and shoulders starting to build out a little bit more clearly. But our downside expectation should be building quite heavily. Okay, so if we can get our 5-minute 20-mile range again, I will be taking the dated put positions. So I will take the dated short sign right there, just so that we're all on the same page. I think this upside has been mostly invalidated so far. I can change throughout the day, but so far it's looking very likely that the upside has been invalidated for the current move. So with that upside invalidation, we want to be able to exit the previous call, which 100% we will be exiting those calls slightly red. Nothing can be done about that, but we're going to try to reclaim as much premium back as possible. So with this inverse cup being closed here, we are looking for this handle to push to the upside. From that handle to the upside, that should give us at least a little bit more premium back within those calls and gives us the range to set up puts. Sorry, I'm trying to color these a little differently. Now, I do want to look at some other symbols in just a second here, just to make sure we're actually going to be seeing this upside that I am expecting here. We do see this smaller inverse cup closing here, which potentially can be pulling us down further. With this inverse cup closing, we can see it aim to make a handle, which I can't draw very well, I apologize, and then pushing further to the downside. However, we are going to be patient on that, as we are within the lower Bollinger on the 5-minute time frame. So technically, this is call room. So we are just going to be very, very, very patient. Let our calls take that 20-mile upside, which is currently around the 681.09. Take that upside, reclaim some of that premium, look for bear structure into a rejection to the downside. So for the moving average retests, and that's actually a really, really great question. Generally, I target my puts 2 weeks out. Um, there's kind of a reason why I do that because sometimes, depending on the weeks, there might be a holiday, there might be some major event there might be something to disrupt the exact move that we're wanting, even though, you know, historically, it happens almost 100% of the time. You go from the upper Bollinger to the 5 mile, lower Bollinger to the 5 mile. That's a very, very historic mechanical move. Okay. With that said, um, why I don't get a week out is because sometimes the 5 mile can take additional days to be tested. We've seen there's been some sessions where it takes 7 sessions to have that 5 mile retest. And, you know, we just want to fully price in the time on the contract. And this is kind of how I like to think about contracts is that if I'm aiming for the 5 mile, okay, the 5 mile is the 1 week level. Well, what do I have to do to secure the 1 week level? I at least have to buy a week, right? Well, what 100% secures that level? 2 weeks out, okay? So if we're looking for a position for 2 weeks out, um, on something else, for example, if we were looking for a move to actually push downward for 2 weeks, then I'd be expecting to get a contract for about a month out, okay? Because no move is going to move directly towards your target. I mean, sometimes they do, but the market is the market. News, anything else can disrupt structure, algorithmic trading, anything else that's going on. Um, so you just want to try to get a little bit more time than the actual exit. There's that double top, really taking out the day, which this was something we were very, very concerned about. Um, I believe I was talking about this even before we entered those calls that this can be working to create a double top on the day if we do not see this handle pushed to the upside. So with these calls here, we have to figure out a proper exit. Okay. Now, when we start seeing very, very large moves below our time frame, so for example, the 5 minute time frame, we're starting to see this push pretty well below the lower Bollinger here. Well, how do we start to figure out where the next major support ranges are? Well, some of the tools we can do is target some of the big liquidity ranges that you see previously. So we see this very large range between the basically 680 to the 689. So that's telling us there's room to trade within there. Okay. If the market's trying to build some form of larger head and shoulder structure, then that room is going to be traded in here because they want to build the liquidity. But what we can also do is go to some of our larger time frames. So on the 30-minute time frame, which usually I'd go to the 10-minute time frame after the 5 minute time frame, but I don't have that set up on my laptop right now. So 30-minute time frame it is. 30-minute time frame here is telling us that, okay, we're well below our 20 mile. The 20 mile is currently at the 680.34. The lower Bollinger is at the 678.74. So is it very likely we're going to strike that, 40 to 60 cents slide downward? Very, very likely. And because of that, that means that we now aim to close this larger cup to the downside. Okay, and I will go ahead and delete some of this earlier structure. But with that downside cup being closed, okay, with that inverse cup being closed, now we can look at some of this other structure. Is that potentially a large left shoulder for this, potentially larger head and shoulders to the downside? Is this that very large bearish structure we've been looking for at the top of the upper Bollinger Day 2? The potential is very large. This technically has been what we have been looking for since the beginning of the day. Even though we did take some different scalps in here, the expectation since the beginning of the day here has been to take shorts to the downside. So, with that said, with the 5 mile or with the 5 minute time frame pushing very, very low, that means that now we need to look to start gravitating towards support. Okay. Now, on the 30-minute time frame, we were also below support, so it's very likely we are going to be seeing some of this push back up to the upside. So our calls to the upside here, very, very nice. Yeah, there's probably about a whole $2 within the call upside here. Even though the conditions are bearish on the day, the call upside here is actually very nice because that would fit very well within bearish liquidity. So call upside, I like it quite a bit, even though the day is turning very, very bearish. Now, with that said, the VVIX has continued to pull up throughout the day. So, continuation within these bearish structures shouldn't be a surprise at this point, especially ever since we identified the double top and talked about that being a potential to the downside. Uh, you know, there were a lot of signals that were telling us that if we didn't have that major breakout within that cup and handle, that we would be heading downward. So from this downward, we're now just looking for a little bit of upside reprieve to exit some of those calls, enter some of those dated puts, and be very well into the rest of the day. Now, for these puts, um, targeting the 5 mile, not just the super dated puts as well, using TQQQ here is super, super, super ideal. Okay. Um, we've seen this pushed up massively over the last few sessions, and because of that, the 5 mile is, you know, still pretty far down. Um, 5 mile on TQQQ is currently at the 46.85. So assuming we close, let's say at the 48 today, assuming we're going to pull down slightly, then that's telling us that potentially we could be seeing that 5 mile test today. Potentially we could be seeing, a 20 mile test coming out of this. Um, but the 5 mile is not very far from us where we're at currently, with the 5 mile being at that 46.84. If we see the close at the 48, that means that the 5 mile would basically be right at that 47 range. So come Monday, it would strike very, very easily. So with these puts, let's take a look at next week's options. And again, you should target these out for a whole two weeks. But with these puts, um, I would personally take either the 48.9, basically anything from the 49 to the 47. I would not go below the 47 strike. I think that's a little too far out of range for 14 days out. Me personally, I'm going to be taking the 48 puts just because they should hit well within the range, a little cheaper, and they're going to gain just about the same amount of premium. So I'm not very concerned about that overall. Okay, so that should be the plan. I'm gonna post that in the Discord in just a second, but we should all be on the same page here. Now, again, I do kind of want to talk about my expectations over the next few months. Now that we're starting to see some of these signals that we are seeing out of the market. So QQQ, closing this very large head and shoulders slash inverse cup. Again, on the 5-minute time frame on QQQ, there is roughly about a whole $2 upside. So again, I really do like the calls here, even though the day is bearish. With us pushing down into that lower Bollinger, really does create the conditions for the calls to the upside. So make sure you try to take advantage of that. Now just give me a second here, and then I'm going to kind of discuss what I've been looking at for the next few months. Let me just go ahead and look at chat and everything. It really depends on for contracts if I take in the money, at the money, or out of the money. So how I like to think about it is options are super strike based. Um, for example, to actually write any option, it only costs you 5 cents. Um, Anything else on the option is based on the Greeks, based on the market price, everything else. So technically your option is only worth 5 cents. Okay. Anything else you gain, lose out of that option is purely speculative. So when it comes to options, when it comes to these instruments being super speculative instruments, we have to understand that they are entirely about what the closing expiration strike is at. Okay. Um, but we can use that to our advantage. We know that with the moving averages, they basically work like little clocks. With with the 5 mob being the weekly test, or the weekly time frame, the 10 mob being the 2 week, the 20 mob being the monthly. We can use that to our advantage to be able to take out of the money options and run them in the money. And ideally, as an option trader, that's really what you want to do, to be able to have the most profit as possible, because you're basically paying for a very bad delta for it to run into a very high delta. Um, Generally, that's not what the dealer is selling the option to do. Okay, usually the dealer is selling the option for the delta to drop off, for a lot of the Greeks to start falling off and working against the buyer. Um, but using our moving averages and everything, we can kind of shift the tables on that. So if there's room, for example, on SPY right here, just within our scalp, we see we're at this 679 range. We might even push down to the 678. You know, our 20 mile here is at the 680.76. Well, that means that very likely, if we're going to be seeing our upside, can we take a 681 with extremely small risk? Absolutely. Absolutely. And is that 681 very likely going to hit at least at the money? Extremely likely. Um, so that's how I like to think in terms of options with strikes. Now, you can't always think about that with options. And the example I had earlier was when I discussed where sometimes there's those positions between the upper Bollinger and the 20 ma where um, there might only be 60 cents worth of movement, say within the SPY or something. Well, if there's only 60 cents worth of movement, then we don't want to really get a out of the money option, because the delta isn't going to shift a whole ton. The delta really is going to be riding a very, very similar strike. You might see some at the money options move into the money, but you're really not going to see the out of the money options run into the money so much during that move, unless something unexpected happens. So if I'm expecting lower movement, but I still want to trade the move, I try to take a lot closer to in the money or at the money. If I see a large, you know, bit of room between the strike to where I can actually land the strike and turn that contract from very cheap OTM to at the money or in the money, then that's what I will try to target for because you can generally buy about 3 to 4 OTM contracts for every single at the money contract. Um, that could be a massive, massive game changer for your portfolio. And if you think about that, just think about SPY here, and we're going to use just random numbers. I'm not looking at the contracts at all. But let's say we pulled down to the 679 or the 678.80, and let's say that the 681 calls ended up being, I don't know, $25 per. Okay, so 0.25 per. Well, on that move back up to the 681, it's very likely we see those calls move well above the $1 plus price. So for the price that I could have bought a single, 679 call, which might have been $100, $200, I instead went and bought between 4 to 8 of those 681 calls. Now, those 681 calls very likely pull up towards that, just super basic numbers, let's say $100. Well, that turns roughly $100 to $200 trade into $400 to $800. Well, with a single contract, maybe that runs up to the, 450, 500 range. Well, okay, same sort of trade, but you also exposed yourself to far more downside because since you bought in the money contract, if you had any downside from that move, you have a very large potential of having that in the money contract pull out of the money. Whereas these out of the money contracts are already out of the money, they're not going to get, hit too hard. Um, if the move isn't going to be available, then we can exit those for a very small loss. So that's kind of some of the thinking behind it. It's very, very situational. It definitely takes a lot of practice and what you're really looking for out of movements. But hopefully that made sense. It's something I've taught a whole class on. I think multiple classes on it before, but um, there really is a whole art to deciding which strikes you choose. Um, I know a lot of traders will just buy what they can afford, and that's not always the right answer. Um, you have to buy what the market is going to price in, because some of these out of the money contracts, they're sold out of the money to burn. They're sold to burn. They're not sold to run against the dealer. So majority of those contracts are going to burn. Um, so we have to be very careful with how we choose our strikes. Now, I want to circle back to VVIX here because again, we have been expecting this pushback upward. VVIX, jeez. So pulled to 108.77, back down to the 107.99. So again, dealers are absolutely buying into insurance. This is very, very indicative of the higher high of the day two upper Bollinger. telling us that we should be seeing that downside consolidation, towards the 5 mile over the next few sessions. So this is aligning extremely well. Basically, what we're waiting for at this point is we're waiting for this push back up to the 5 mile upper or the 5 mile, excuse me, the 5 minute 20 mile range, which is at the 680.70. At the 680.70, we will be doing dated shorts and shorts for 2 weeks out. So I'm going to delete a lot of the structure as I think it's very clear kind of what has been going on for the day. And now that we have truly confirmed that a lot of the bullish structure from the early morning has been validated, um, we can safely look for these dated shorts in this position to, continue the downside. Now I want to write dated shorts and 2 week PT puts. All right, so that's our game plan, everybody. Dated puts at the 20 mile. Oh, you don't have to worry about asking questions. I mean, again, this is all I do it for. Um, I know some people might be thinking that I'm doing this to be some guru and make money off subscriptions and stuff, but it's really not the case. I started this group entirely free. Um, I was posting for I think 2 or 3 years straight, between Reddit and Weeble and everything for free. Typing over 3,000 words a day, just going over posts and going over my technicals and everything. So I have zero issues with you asking a million questions. My whole philosophy on what I do is that I wish that I had a mentor when I started trading. Unfortunately, I had to learn this all by myself. I had to lose thousands and thousands of dollars. I had to have many, many moments of being beyond depressed at my absolute worst. Um, I've had to go through a lot to teach and learn what I've learned. And for me, this is something that is kind of my life's goal at this point. Um, there's really nothing greater that I could provide to humanity than being able to show people how to navigate the market in the way that I do. Um, because I know that I have a very good system. I know that it works, and the market is extremely, extremely difficult. Um, we see some of the smartest people in the world absolutely fail at the market. So it takes very, very specific, unique skills, okay? And whether that's because I'm, you know, some weird autistic guy or something, I have no clue. But if I'm able to show people some of the stuff that I see, if I'm able to, help people make money and create futures where you do have financial freedom and success, then I'm very happy about that, you know? Um, Originally when I was younger, I always wanted to be a doctor or in the military or something. And because I have a lot of physical issues, I'm unable to do a lot of those things. So this is what I can do. Um, and with the labor market really turning into pretty bad environment and just from when I was a kid to now, and again, I'm only 34, so I'm still pretty young. But from when I was a kid till now, the hiring market has 100% changed. I mean, it's unheard of to walk into a business with your resume now Everything is done online. You do interviews, not even face to face anymore. Um, Applications are written by AI, so job jobs job the people actually hiring can't even trust the candidates anymore. Um, we now have AI being able to absolutely decimate a large majority of the lower level entry jobs probably within the next 5 to 10 years. People need to have a way to make money. Um, you hear Elon Musk talking about universal income and stuff like that. Well, what does that mean? That means you get a punch card that affords you rent, food, and then you're, living a dystopian life for the rest of your life. It's not what I want to see out of, you know, my children's generations. I want my daughter to be able to thrive and have financial freedom that, really everyone who works hard should be entitled to. And I think that a lot of the future of technology is really trying to take that away. Now, the good thing about trading is that it doesn't matter if there's a billion AIs automatically trading or not. There's still room for you to make your money. Um, so this is always going to be an avenue for people to make money, if other avenues are no longer existing. So I heavily believe in creating major learning, uh, curriculums, classes, schools, all sorts of stuff for trading. I really want it to be something that people stop looking at as gambling and look at as something that can actually be done with consistency. And each and every stream, you see that day in and day out that we're able to very, very consistently exit and enter trades. Um, so that's what I want everybody to be able to do. Um, that's the best thing I could ever achieve out of my life is to be able to provide what I'm able to see to other people. So yes, I do charge for my Patreon and stuff, but that's not the goal. That's not the end goal, you know. Never was. The main reason why I even started to charge for that was um we started adding some tools to the Discord server and everything that was costing quite a bit a month. And um, some of my trades weren't going so great at the time. And I did need a little bit of extra income, so it does help, but I don't make crazy money off the Discord or anything. Truly here for the love of the game, so. Now, semiconductors, I'm gonna go ahead and delete these structures because we have this head and shoulders forming. Okay, and this is very, very, very indicative of that continuing or of that continued downside. And again, out of QQQ, we were expecting sort of a rejection out of the day. Um, the upper Bollinger was at that 616 range, and we would have had to push up a whole another $3 to claim that range, with SPY and semiconductors being on day 2 upper Bollinger and semiconductors being on day 3 upper Bollinger. Um, it does create a lot of conditions where there's a lot of weight to the downside. So I have not entered the dated puts just yet. Again, I am waiting a little further. Now, potentially we can be seeing a small inverse cup completing to the downside to continue pushing us within the lower Bollinger. Um, that's something that potentially can happen, but overall, I'm still looking for this upside towards the 20 mile here. Okay, 20 mile is at that 680.56, so that whole dollar upside is going to help quite a bit within entering these positions. In the 1 minute time frame, we do see a small cup and handle, so that can give us that price action to the upside. And if we can close this smaller cup here on the 1 minute time frame, that would correlate to starting to push upward towards that 20 mile on the 5 minute time frame. So we will look for that. And again, that will be our call exit on the day. Whether you took the calls down here or you took the calls up there, that's going to be the call exit. Um, and that will be the major put entry on the day as well. So we're looking for that level. And from that level, we will be setting up for next week. Now, I want to take one last look at the VVIX here. So again, still very elevated, pulled all the way up to the 108.77, currently at the 107.92. So we still have some room to head up in that. Very likely we're going to be seeing this head up towards the 110, 111 today. Now, I am going to be discussing the overall market, but I do kind of just want to wait for us to actually fully enter these short positions here. Um, Again, that's something I've really been wanting to time properly on the day, and we did miss some of these earlier entries, just because we did see some potential bullish structure. But now that that bullish structure has been invalidated, we do need to claim this range at this right shoulder before we fully break down. So the dated short, um, these are just going to be puts that we're taking on TQQQ. Now, I do want to post these in the Discord and everything, so 1 second, hold on. I want to show the SPY price just so that we don't miss our exit. But the TQQQ puts that I'm looking at are the 48 puts for, I want to say April 24th. Okay. Now you can get the puts down to the 47 strike. Basically anything from, higher up strike towards that 47 is going to be acceptable. But I'm personally going to be targeting the 48 puts. The 48 puts will be catching the full downside that we are expecting. And they're not fully in the money or at the money, so um, they are going to be a little cheaper than some of those other ones. Now, I just want to look at VVIX really quick. So VVIX is at the 107.92 still. So still very, very elevated. We just need to be able to get our upside out of SPY here, be able to get that call exit, and to be able to enter our dated puts. Now, the actual VIX itself did hit the $20 range today very briefly. It pulled down from that slightly, but it's very, very, very likely we're going to push back up into that range, which does push us back into that bearish territory. Now our 20 mile here is at the 680.51. So again, we're still being very, very patient for that. I know it could be hard during some of these selling times, but just have to continue holding for it. How's everybody's trading going today so far? I know it's been a tough day, but um, have had some good trades so far. I will check the VVIX here in a minute. Yeah, absolutely. Um, let me look at CNC really quick, and then I'll discuss the difference between all the fixed instruments. So this is CNC, and I'm just going to look over a couple different time frames for a moment. So one thing that I like to look at, and one thing I really like to see when I am seeing bullish structure, is that you're seeing a continuation of bullish structure here. See how we have this smaller cup right here. Does end up breaking down, but it ends up turning into a much larger cup. And out of that cup, we're starting to see this smaller cup here form. Sorry, it's very hard for me to drag the mouse properly when I'm trying to be precise. But based off of just these three blocks, what does this sort of look like? An inverse head and shoulders. And that's because that absolutely has all of the liquidity for that. And it's also, like you mentioned, this cup and handle. Sorry, it's very hard for me to draw. So you're having multiple structures here telling you that this is looking very good to the upside. Okay, now what's our upside from here? Our upside from here is this big liquidity up at that 44 range. And we know there's a ton of liquidity there because they chopped there for quite a while. So is it very likely that we see this same liquidity taken over here? I wouldn't say unreasonable. I would say likelihood is definitely present. So we will mark this out just for later, just to look at later to see if we end up being correct about that. But that's what I'd be looking for, sort of structure like that. We had this massive gap here. We see that there was liquidity taken here. but it was a while ago. And the last time they went through that liquidity range, they just dropped through it. Okay, so they didn't take that liquidity, they didn't really do much with that liquidity. That liquidity is all still there waiting to be traded upon. All of this liquidity right there is still right there being traded, waited to be traded upon. So is it very likely we're seeing this bullish structure pushes back up there to trade within those levels? Very, very likely. So that's CNC. It looks very good to the upside. Now, daily time frame, just to extra double check this. Daily time frame, you have not hit the upper Bollinger yet. So the upper Bollinger on the daily time frame is at the 3808. So that would suggest you'd be pushing slightly above that. So probably around that 3830 range. Starting to pull you a lot closer towards that, 40 through 44 range. So I definitely think that the likelihood is very doable in there. Just have to be very cautious that we don't have a 5 mod test um, fail here and then head back to the 20 mod. Because again, with the 5 mod being underneath us, with the upper Bollinger being above us, that does create a really, really tricky bearish condition where if the market doesn't take that upper Bollinger, it can have a massive breakdown. Okay. So overall, CNC looks good. You just have to be cautious of that potential breakdown. But other than that, it looks absolutely fine. Now, SPY here, we are starting to see this smaller inverse cup starting to form, which is unfortunate because we are trying to get some upside structure here to be able to enter a dated put. So far, we're not being able to see really any of that reprieve just yet. Now, within the 5 minute time frame, um, with this inverse cup likely going to be built here, again, we should be anticipating a slight push upward. Now, with this slight push upward, this does bring our range much closer to probably about that 680.22, 680.20-ish range. Okay, so while our upside is shrinking a little bit, we still should be expecting that upside as we did, you know, finish this inverse cup to the downside. Inverse cup should be expecting slightly bearish or bullish structure at the bottom to take us up to create a handle. A handle very likely will coincide with this 20 mod pulling downward. So that's going to be the goal. Now on the HIG, we've still been seeing some major selling. It's kind of a little deceiving because within the time and sales within the shares, we're actually seeing quite a lot of share buying. There's just within the last few minutes, there's a 72,000 share buy, a 107,000 share buy. And that's quite a lot of money. That's a lot of money expecting upside. Okay, that's really what HIG is expecting. Now within liquid, we see a little bit of those large share buys, not as drastic. There's some for 2800, 7700. So not as large as the HIG. But overall, a lot of our symbols are telling us we should be seeing further selling within the day. Now, the difference between the VVIX, the VIX, UVIX, UVIXY. Okay, so let's get into it. UVIX or VVIX is the futures. Okay, Now, what this is measuring is volatility within the VIX. Okay. So this is measuring volatility within the actual VIX itself. So this means this is basically measuring the contracts within the VIX. If there is, actual movement to the upside in the VIX contracts, then you will be seeing the VVIX pushing upward because that's showing that the futures insurance hedge is catching that volatility, and they want to be able to, you know, essentially charge on that volatility. Um, VVIX, with it being a future, is pretty much only traded by the largest of largest money. This is not something that retail traders trade very often at all. Um, what this is telling me compared to the VIX is that with the VIX, one, there's no shares to it. So there's no equity. Okay. VIX is completely a derivative, means that it trades entirely based on the options. Okay. Now, the options can be purchased by retail. The options can be purchased by, pretty much everybody who has access to a broker. But the VVIX is not going to be taking account for a lot of that retail volatility. It's tracking a lot of the deeper contracts that really only the big money targets. So when big money is targeting, um, you know, VIX calls, they're usually going deep in the money. They usually don't go super out of the money. But if they do, they usually do a massive position. And this is going to be tracking that. Okay, so this is measuring the volatility within the VIX itself. Now, VIX is just an overall volatility checker. This is just showing that is volatility heightened on the day, yes or no. Um, BVIX, this is telling you, is there actually volatility within that heightened or lowered volatility on the day? So for me, this is a much better signal. Now, UVIXY, these follow the VVIX, not the VIX themselves. These follow the actual futures, so they will have more active pricing compared to the actual VIX. Um, that's why, for example, there's some days you can see the VIX trading kind of in an opposite direction compared to UVIXY or UVIX. But UVIXY and UVIX are just simply leveraged ETFs based off of the VVIX. So UVIXY is, I believe, a 1.5 leverage, where UVIX is a 2 leverage. So hopefully that kind of discusses some of the, you know, differences in those symbols. They measure same things but in different ways. So measuring contract volatility and measuring futures volatility for me shows a lot more active pricing compared to um, just the VIX moving up or down. Whereas that can be you know, I don't want to say manipulated, but manipulated through retail sales, through hedges, through, all sorts of different positions. People selling calls into it, people selling puts into it, you know, things like that. Yeah, that huge gap up was really hard. Um, I know I didn't get a chance to post it in the Discord, but I did say during the stream that we all should have really taken those 46 TQQ calls because while I did sell mine earlier, they sold for, over 300, $400, something like that. I didn't check exactly. Um, but I think we bought those positions for like what, 30, $40 or something like that, and it was just a hedge position. Um, it was just just in case we had upside buying. Now, we didn't expect the upside buying we got. Um, of course, this was a lot larger than what we expected, but we have to hedge positions for that, and don't feel bad about it because it happens to the best of us. I've had times where I fully planned to get a hedge and I missed it, or thought the trade was going to go one way and it completely just gets decimated. It happens. We're in that um, you know, trading climate where news can happen in literally the drop of a hat and it can do massive, massive, massive moves. So having cheap hedges is better than no hedge because in this case, the cheap hedges for me absolutely saved my butt on those positions. I was able to sell the puts yesterday for, not a whole lot, but they did sell for a little bit of premium. Uh, obviously they were very deep red. However, from that premium, we had those 46 calls that were absolutely just blazing. So, it recovered the vast majority of the losses. I actually think I might be positive on the position overall. I just haven't actually checked the P&L. Now, hedging is an art, okay? So this kind of goes back into someone else wanted me to discuss with straddles is that I used to play straddles all the time. And the way I would play straddles is essentially, and I just want to turn off all the drawings here, go to the moving averages. But let's say we were at the upper Bollinger, right? We had the upper Bollinger move, and from the upper Bollinger, I generally expect the downside. Well, usually, if I was still in my straddle day and age, I still do straddles, but just not as actively anymore. Um, I would take a position to the upside. So with the market, say currently at this 678, the upper Bollinger is at that 683. Well, take a out of the money position just in case we see some absurd push into the upper Bollinger again. Um, the call to the upside is going to be out of the money and cheap enough that if your put lands, then your call could almost burn to zero and you're still going to be in the profit. So that's the ideology, is that you're trying to aim for one side, but you have the other side positioned just in case the worst happens. Are you always going to be green within your hedges? Meaning, like, when you do have that push upward, is it going to make every single penny back you lost? No, not every time. Sometimes you'll make more money than what you lost. Sometimes you'll make less. Um, but at least it's something rather than just a pure loss. Now, for ranges like the 20 ma became a very, very quality straddle range because on the straddle, and try to ignore all the lines and everything for a moment, I just want you to pay attention to these boxes. But the straddle range on the SPY basically told us that either one, we can start targeting the upper Bollinger, or two, we could start targeting the lower Bollinger. Well, when we were at the 20 ma was, roughly at that 660 range. Well, what was the upside? The upside was roughly a whole, $20 to the upside. The downside from here, roughly what, $16 downside? Um, or excuse me, 25. I'm miscalculating that. 25 to the downside, 20 to the upside. So why wouldn't you hedge those positions, right? Why wouldn't we take a put targeting this 630 range and a call targeting the 680 range for, 2 weeks out. One of those ranges are very, very likely going to be hit, or we're going to be seeing the price action pull towards that range. So that's how I used to trade straddles a lot. Um, Ideally, you should still trade straddles like that. I just haven't been um, doing the 20 mile hedges as often really recently, just because we have been within bearish conditions where once we hit the 20 mile, we reject. Once we hit the 5 mile, we reject. So for me, this hasn't been a major hedge range just yet. Um, but that's the whole theory behind it, is that you have your expectations on one side. It may or may not work out that way, and you want to be prepared just in case. Essentially, yeah. I mean, they're not always going to be out of the money, but you know, it's okay with taking out of the money because it's like for this example here on the SPY, we essentially had roughly $20 on both sides. Would have taken or would have taking in the money positions worked? Absolutely. The deltas would have been very much the same when you originally opened those positions. And as we started climbing upward, climbing upward, climbing upward, the put delta would drop. Some of the other Greeks within the put would drop, but it still has some time duration to it. Okay. So for example, let's look at the April 17th SPY 630 puts. Okay. And that's for next week, right? Hold on, I'm trying to navigate. So the 630 puts for next week have dropped to roughly 0.27. Okay. So roughly they're worth $27. Well, if you had the 680 calls, they're roughly 570 each. Okay. Um, I can almost guarantee you the opening price of both the put and the call at that time probably would have been around that 240 range. So, would you be technically in the money right now? But with it being out of the money, or let's check more in the money position. So let's say we opened a 660 call versus that 660 put. Okay. Well, at the time, for us to have opened that 660 call, 660 put, probably would have been about $1,000 on each side. Okay, so let's say the whole trade would have been about $1,000 or $2,000. Well, currently the call, the 660 call for April 17th is at 21.10. So that's 2,100 and, roughly $10. While the put is worth 150, so $150. So are you up in that position? Very slightly. Um, it's a way to catch the move without fully burning yourself if you're wrong. You will make less money on the move, but it's a very, very safe way to trade overall. It's something I absolutely lived by for almost 2 years straight. Almost every single position I opened was a straddle. Um, they do take some learning because there are times where you'll open straddles and you might have opened the straddles when the IV was high on the contracts, and then all of a sudden the IV drops on the contracts and your entire straddle's down even though you're starting to get your move. So they can be a little tricky, but again, just lots of practice. That's the best thing you could do is just practice, practice, practice. Um, every time we get to this 20 mil on the daily time frame, if you're not comfortable with actually opening straddles, then take a paper trade position. Paper trade it and see how it works out. See how the contracts move. And yes, I know they don't move exactly one to one compared to how a normal contract moves, but it's still going to give you a lot of that same price action. You're still going to be able to see how they work and function. No, they don't cancel each other out. So you can have um, the put and the call at the same time. Um, Now, in terms of canceling each other out, so think of it as a scale. Okay, with a straddle, you're putting two equal weights on that scale. Now, the whole goal is for one of those weights to gain more weight, and hopefully you can sell that weight that's losing the weight prior to it fully hitting zero. Now, can you wait for it to hit zero and only profit on the call? Absolutely. I've had many positions do that where the other side has burned completely to zero, and I mean like zero zero, where I couldn't even sell the contract zero. Um, and the call has completely overtaken the put, giving me winning premium and then some. Um, you just have to remember that deltas are never constant. Deltas are never a constant, and that's something that is very, very hard to get across because when we buy a contract, we might buy it for, say, 0.60 delta. Well, that delta is always changing. It is never going to be a constant thing. So even though you might have that equal weighted position at the beginning, eventually that equal weight's going to start shifting. And because that's starting to shift, you do usually have to try to maneuver the position that is starting to lose a lot of that weight because eventually the delta and everything is going to get so far out of the way that it's going to just drop off. And you want to ensure you do that prior to it losing the full weight, and that way you can actually, um, make money off of the entire straddle. Now remember, on this 5 mile upside or on this 20 mile upside here, we are going to be entering dated positions. Um, I did share the watch list in the Discord chat. Sorry, I'm talking like a robot. I'm just trying to look at everything. Now, one of the main options that I really, really, really want to target is this TQQ30 put. Okay, and that might seem just absurdly out of the money. But once we get some actual downside selling, we know that TQQ basically drops very, very, very quickly. So the bid and the ask on this right now, hold on. Currently at a 201 bid, 214 ask. Okay, so roughly going to be around that 207. Um, that's something I'm looking for, very much so. I'm also looking at the SOX S 56 calls. Now, SOX S is the bear ETF for semiconductors. SOX S has pulled down very, very, very drastically um, with this buying move. Okay. However, and I do want to make sure we cover this split here. However, with this 56 strike, and you can go for something like the 49 strike, 50 strike if you want to be a little more conservative. However, with this 56 strike, this is targeting a lot further downside that we have been expecting throughout the rest of the year on QQQ SPY semiconductors. So I do believe that this could be a very, very, very quality position. So I just want you all to keep that very much in mind. Now, if you're wanting something shorter, again, if you're wanting something for just the 5 mile downside test here, Then we are looking at the TQQQ 48 puts for next week, or not next week, but for the 24th, excuse me. Um, and those are about 168 per. So absolutely reasonable, absolutely within strike range. So that's what we will be looking for. Now again, we're just being very patient for this 20-mile range to hit. We're not going to be entering early here. 20 miles currently at the 698, 87. So we still have roughly a whole 40 cents, 50 cents of upside. I want to correlate this with semiconductors. So semis are already showing that that level is within range. And QQQ showing us that we still have, roughly that 60 cents of upside. So all of our symbols are showing us that we should be seeing that upside within the SPY to hit our 20-mile range here. From that 20-mile range, we will be entering into the dated puts. And fully exiting any calls. So I currently don't track the 100-day moving average. Um, that's just out of personal preference. And the main reason why I don't track the 100-day is because since I do track the 50-day, I do track the 200-day moving average. For me, the 100-day isn't so crucial. Now, are you really going to be seeing a lot of different signals between the 100-day and the 50-day? Yeah, I mean, you're going to be seeing a different price range. However, they're going to be moving fairly close. Okay, yes, there will be a little bit of a lag to it. However, they still will be moving fairly close. So for me, the 50-day moving average is roughly that 2-month moving average, 2.5-month moving average, 100-day roughly, quarter, a little longer than a quarter moving average. Um, it doesn't tell me a whole lot about the trend that the 50 mile and the 200 mile aren't telling me. I don't usually use the 50 mile or the 200 mile as specific levels to test either. So, I wouldn't use the 50 mile as that either, or the 100 mile as that either. Even though there's definitely a case to use it, I'm not saying it's not good at all. It's just for what I track, I don't think I'd be able to make a whole lot of usage out of it. Now, potentially, we can be seeing a little bit of a inverse head and shoulders here. However, again, BVIX has just been climbing the entire day. It's at 109.23. So we have to be extremely, extremely careful. Basically, just trying to look for any form of upside to position into these dated puts. And I do think we will get our slight upside. May not seem like it, but I do think we will get it. Primarily because We've been hugging the lower Bollinger for a large majority of the day. It's been quite a while since we've tested the 20 mile. Again, with this being the 5 minute time frame, we should expect 20 iterations of the 5 minute candle before, roughly retesting the 20 mile again. We're starting to get very well within that range. The 20 mile has been pulling down towards us as we've been trading, you know, yeah, we're trading down slightly towards it, but we have been slowly trading upward towards it. So I'm expecting this range to hit very, very soon here to fully give us our level. And from that level, we can start positioning. Now, I'm only going to be streaming probably another between 10 to 20 minutes here, as I do have to start getting ready to go pick up my daughter fairly soon. However, I will happily answer any questions anybody has while we do have some time. Yeah, and we might be having a 100 mod bounce here. Um, Again, it's just for me the 50 mod, 100 mod, 200 mod, they're trend indicators for me rather than level indicators. Whereas the 5 mod, 10 mod, 20 mod, they're very closely traded to us. They're levels that we can actively look at within, 1 to 2 week periods. Um, Not that these other ranges aren't important. However, usually the market will try to grab the level rather than the exact specific, cent, compared to the 5 mile, 10 mile, 20 mile, where the market will just actively aim for the actual penny on those levels. Yes, they can aim for the actual penny on some of these longer term moving averages. We have seen it, but it's just not something we actively look for. It's more so just to show us where the overall trend of all the other moving averages are at. Now, potentially forming this inverse cup here to the downside. So if we don't have a bounce almost immediately, we will be pushing down to the 678.50. From that 678.50, again, I will be looking for an additional push upward. Yes, our downside is continuing to shrink. However, we do have to wait for the proper entry because even with all this downside here, there is the possibility that we can have something push us to the upside on the day. Um, Even though that might just be wishful thinking, just the fact that we have been on this basically the underneath of the 20 mile the entire trading session for the 5 minute time frame. Um, this is telling us that potentially this call range is starting to get loaded up. Even though we're seeing bearish structure at the bottom, we have to remember we usually don't short at the bottom, just like we don't take calls at the top. Um, Same thing goes here. Usually when you're at the bottom, you start taking calls. Usually when you're at the top, you start taking puts. So even though this looks very dicey and very bearish, this can lead into a very large push upward. Um, just because it's been so bearish, as you know, wonky and backwards as that sounds. DVIX hitting a new high of the day. So Again, a lot of signals telling us that our upside is going to be very, very short here. We might even try to time our long put entry within this 1 minute time frame. It's not something I usually like to do though, but we are seeing the VVIX just absolutely go crazy right now, and that could potentially make it so we don't hit our 20 mile level here on the 5 minute time frame. We will be looking for it though, but it is starting to get a bit sketchy. Now I am going to start putting in a bid on some of these um TQQ 48 puts for April 24th. Let's see, the bid and the ask. The bid is at 177, ask is at 189. Let's see if I can get 179. That would be ideal. So if we can get a move upward, then that's what I will be trying to secure those at. I have to be very careful with this push downward because again, this could be that inverse handle on that inverse cup we identified on the smaller time frame. So we have to be very, 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 very cautious here. I think I do want to look at the 1 minute time frame here just to really confirm we're not going to end up dumping here. On the 1 minute time frame, we should be expecting a push back up to the 20 mile here, which should be at that 679.20. So even with the 1 minute time frame being bearish, we should be expecting a slight push upward. Just have to be very, very careful. Our VVIX is at 109.75. It is pulling down very, very slightly. So if we can get that slight pull downward, if we can get the dealers to give us that quick push upward, then we will secure our puts and we will be riding out the rest of the day. But I really do want to aim for that level. Um, if we're not able to hit that level, then I will chase a put, just because they're so dated, but I won't be happy about it. So, okay, this should be our push upward here. We can get it, that'd be very, very great. In the 5 minute 20 mile is at the 679.50. So if we can hit that level, that but I am starting to climb my limit orders upward on these puts as I'm not going to miss this entry. I will be catching this entry one way or another. So I will 100% make sure I catch my puts on this move upward. And again, this is your time to be exiting any of those calls that we had from earlier, or if you tried to enter on the lower Bollinger earlier and missed it because it pushed below it, this is going to be that call exit. So please make sure you secure it, okay? Um, it's entry and exit. And start really getting some of these puts secured. Okay, I have some of them starting to buy. Perfect. Great. Exactly what I was looking for. Okay, so I'm in my dated puts. Um, I did get them for April 24th, and I do have some for September. Okay. Now again, the 24th April puts are purely for the 5 mile retest. Um, if you have runners from that position, then you can go ahead and try to run those back to the lower Bollinger, as I do fully kind of expect the market to head back down to the 20 mile, reject the 20 mile, head back down to the lower Bollinger. So that's the overall goal. Secured puts for that. Now, can we have a little bit of upside on the day still? Absolutely. Am I concerned about it? Not at all. Um, Pretty much out of all the day trades that I want to be in today, we had a little bit too much chop in the morning where it did kind of kill two of the call entries, which for me, that was okay. I made plenty of money off of the 46 calls earlier in the week that we sold today. Those pretty much paid for entirety of the week. And we did have some good put positions. Now, unfortunately, I didn't take those put positions. I wish I did, but I just had quite too many interruptions earlier in the morning to where I was unable to. But with that said, everybody should be having some form of dated put if you're able to afford the position. Yes, I did have a stop level on the puts. For precious metals, I am long term. So let's kind of go over that very quick. And I said I'd go over the whole market, but I'm kind of running out of time here on my day, so we're going to do it very, very quickly. And we're going to set the range for year to date. Okay. Actually, I want to put a favorite on this because I want to be able to easily circle back to that. So we're going to go look over a few different symbols on the year to date time frame. This is the SPY. Okay. So within the SPY, essentially since the beginning of the year, we've had the SPY in a selling posture. Now let's go to semiconductors. Since the beginning of the year, we have had semiconductors slightly in a selling posture, but we had a lot of buying within this. So we're going to keep this as kind of like a white range, more as the neutral. Okay. Oh no, that's success. I meant socks. That's why it's showing me incorrect. I was wondering why it was showing me wrong. I was like, I knew the year to date was a lot more buying. So semiconductors, huge buying. Okay, just absurd buying since the beginning of the new year. Let's check tech. Tech, major selling since the beginning of the year. Let's check precious metals. And actually, I want to make this red. Let's check precious metals. Had some buying on the year, but overall, a lot of selling so far. It's starting to see some buying again, but there has been a lot of selling. And this is the exact same with silver, platinum, palladium, everything else. Well, what about oil? Well, oil's been seeing massive buying since the beginning of the year. It is absolutely massive buying. Okay. And what has Treasuries been seeing? Sorry for all the other drawings on here. Treasuries has been seeing a lot of consolidating, which is also in tandem with selling. Okay. So, what does this mean? It means that since the beginning of the year, the markets have shifted drastically. We have shifted out of tech, we have shifted out of precious metals, we've shifted out of crypto, we've shifted out of treasuries, we've shifted into semiconductors, and we've shifted into oil. Okay, so that means that semiconductors and oil are safety within the risk. So now what's going to happen? We're seeing oil pulling back downward, and we're starting to see the buying returning within tech, within precious metals. Not so much within treasuries yet, but that is because of multiple other conditions as well. But I do expect treasuries to start seeing buying as well. Now, does this mean I'm bullish for the market overall? No, but this does mean that market is going to have to shift again. We're going to see a lot of that weight lost out of oil, and that weight lost out of oil will have to enter into other funds. So does that mean we're going to see some upside in tech? Very likely. Are we going to see some upside within crypto and treasuries? Potentially very likely. Can we see some of this oil selling or oil weight move into volatility? Potentially. Um, so that's where we have to really figure out where the next step is. But we do know that the next step, at least for precious metals, is to start heading back upward. Okay. That weight correlated entirely yet. Again, with HIG and liquid, we have been seeing some continued selling, even with some of that oil volatility starting to drop again. So we're not out of the woods with the selling. Um, but hopefully that kind of shows you that the market is doing some very large, um, rotations in what's actually being held. We might see some weight shifted out of semiconductors and put back into precious metals and tech again. Um, that's going to take some time to determine, but we do know that there's going to be a shift out of oil, and that money does have to go somewhere. So I'm glad we took the puts when we took them because we did not get that 20 mile range. We have a continued rejection. So our put entry here became actually very, very quality. So I'm going to mark that because I like marking when we do good things. All right, everybody. Gonna check chat. Do I have a stop level on the puts? No. For these puts, I'm not worried about stopping them out at all. Um, with the upper Bollinger here, this is essentially the end of the road. Uh, again, thinking of Bollingers as roads, with the white lines being the sides of the road. Um, the upper Bollinger is kind of telling us that we're hitting that side of the road. It's time to return towards the middle of the lane again, just like when we were at the bottom Bollinger. That was telling us that, you know, we're starting to course off the road. Now we need to head back up on the road again. So, um, no, I don't have stops on these puts. I don't expect the market to continue flying past this point. We've already had a lot of the good news that we're going to receive from the Iran conflict, which, you know, so far is a ceasefire. Um, that price action took us to that range, and from this range so far, we've been seeing consolidating and selling. So I don't think the market is really truly in a position to realize growth, especially when we do have conditions for massive oil deflation. And that deflation is going to very, very greatly hurt the labor market. It's going to greatly affect um, consumer spending. So there's going to be a lot of conditions where we can be seeing a lot of downside. Um, Even with NVIDIA's earnings, even with a lot of these earnings, um, a lot of this current growth is showing tapering. So there's not a whole lot of room within QQQ right now to be seeing a ton of that breakout growth like we were seeing. Um, Not that we can't, you know, push higher levels and everything, but I really do think that overall this was just breaking some of that downside selling. Um, More so just a negative volatility reaction to the overall volatility, which makes it look like an upside squeeze. But we haven't broken the bearish conditions yet overall. So, especially with the Bank of Japan needing to do a major yen intervention, I'm not expecting the market to really be positioned into a buying posture just yet. So, okay, everybody, that's going to be the stream for today. We should pretty much have the plan all taken care of for the day. If we head upward, that's just going to be an additional put entry. But besides from that, I will be making a video this Sunday because, my hand's been healing up a lot more. It's not fully healed up yet, but very likely I will be in an easier cast by that point. So I should be able to, um, you know, work on the videos and everything a lot easier. So Sunday, there will be a video come, hell or high water. And Monday, Wednesday, and Friday, I will be streaming again next week. Now, just a reminder, I am going to be trying to start the afternoon classes towards the end of the month. So those will be on Thursdays or Tuesdays and Thursdays. Basically towards the close of the market session. Um, we still have to fully get those worked out, but I am wanting to get those started towards the end of the month. So I do look forward to having you all join those, excuse me. Thank you everybody, and I hope you all have a great rest of your trading day, and I hope you all have a wonderful weekend. Hopefully our puts do some massive work for us. Again, on the SPY, the 5 mile is currently at the 670.56. So assuming we close, even if we close right at this level we're at right this moment, the 5 mile would be pulling up close to that 673 range come Monday. That puts us very well within the range to test that level. So I do think we'll be getting, some quality room out of these puts to the downside. So, all right, everybody, have a great weekend. Enjoy the rest of your day, and I will talk to you on Sunday